Wall Street fell for a fifth straight session as weak U.S. jobs ignited more concerns about the global economy. U.S. employment growth almost stalled in February, with the economy creating only 20,000 jobs, adding to other signs of a sharp slowdown in economic activity. The weak U.S. report added to economic fears, also fanned by a sharp fall in China's exports and after the European Central Bank slashed growth forecasts. So, are we in for a soft or a hard landing? Well, let's take a look. We're going to be taking a look at two charts today, starting with the 2-year weekly chart on the spiders. What I want to focus in on is the basing process and the recovery. So back here in early 2018, we had the downtrend, but we had that basing and recovery there, and we had this pretty large hiccup at that point there. So into the current time period, we've got the downtrend, and then we have the basing and the recovery here. No, I didn't forget about this. Now, what happened there, if you remember, we talked about it, was that there was a bottom of that chart. That trend line was there. And the nervous Nellies were sitting on that trend line, and basically in a self-fulfilling prophecy, they sold themselves off. So that was their problem. But back here in the recovery, we're now having a downtrend, and I think it's just going to be another blip like that, similar to the one that I drew here earlier. Let's go down and see what it looks like here in the MAC. So we had the basing and then the move up, and right here was that little hiccup. So we have the basing and a recovery, and I think we're going to get that little hiccup here at this point. It'll show up pretty soon, more or less. Into the histogram, we have a topping of the histogram, and I think this is going to be temporary as it was back here during that time there. That's when we had that little hiccup, and then we moved on up for another couple of months or so. Moving here into the price rate of change, both the fast line and the slow line are moving pretty strongly up to that zero line, and I think they're going to move through that. However, here again we had the basing with that hiccup, that sawtooth there. So we have the basing here, and I think we're going to have that hiccup at that point there, something like that. Moving here into the relative strength, same thing, basing with that hiccup, and I think we're going to have this basing with that hiccup here. Interesting to note, we had that double top, and you'll see this in the other oscillators, the double top here as well. So a lot of similarities. It's not perfect, but a lot of similarities into the stochastics. Things are moving up relatively strongly. We're toward the overbought territory, and I think that that little hiccup there is going to be something that we see here, and hopefully, like it did back here, will continue on for another month or two. So only time will tell, but right now, it doesn't look any worse than this hiccup. Moving on down to the volume. At this point in time, we had 1 week of pretty strong selling. Now that hiccup in 2018 was during this time frame here, where they had 3 weeks of selling. So I don't think it's as bad yet, but we'll have to wait and see. And then again here, we've got the Williams with the basing, the recovery, and that hiccup there. So we have the basing and recovery, and I think we're just going to get a sawtooth hiccup there, and then have some more sawtooths, hopefully for another month or so. Back on up to the price chart so you can take one more look at that. And now we'll go to the 6-month daily. And looking at the 6-month daily chart, here's what we had this week, a pretty good sell-off from that top there. But we're riding just right on the 50 EMA. We've gone through the 20 EMA, but riding on the 50 EMA, we might move through that next week. I'm not quite sure. I think that the MAC is saying that the fast line is starting to accelerate on the downside, and so the slow line will follow soon enough. But we are above that zero line, so we do have more strength than we did back at these points here. So we're just going to have to wait and see how shallow the fast and slow line go here on the Mac. I don't think it's going to be real deep. I don't think we're going to go down this far. Again, time will tell, and we'll be able to see that here soon enough. But in my opinion, looking at the histogram from the top here, moving on down, that's not a real steep sell-off. There's no sharp sell-off that I see. So I think it's somewhat under control, at least at this point there. And I think the price rate change also shows the same thing, just a very gentle sell-off. So even though the pundits are telling you otherwise, I don't see any big crash or anything going on. Now, the RSI did take a pretty good deep little dive here, but still we're above that we're in December and here in October. So we'll have to wait and see on that. And even if it gets down to these lower areas here, I don't think that that is really much a concern at this point. Into the stochastics, it is falling too at a fairly steep decline, but I don't think that there's any real major concerns at this point here. We're just going to have to follow this sell-off and see where it goes. Right now, I don't think that the sell-off has a lot more behind it. And you can see that here in the volume. The volume is really not all that significant at that level here. You can go up. Certainly the volume during this sell-off here had much higher peaks. And even here, this sell-off there in October, that was much worse than I think we see here. So there really isn't a lot of power behind this sell-off. In my opinion, it's just a garden variety, at least at this point in time. We had the bottom here recently, but that may do a little bit of sawtoothing in the bottom here before we start recovering. Back up here to the top, I think again the max shows that we're still in a sell-off mode, and we'll have to wait and see how that rings out. But for the most part, I think the chart looks pretty good. It does not concern me in the least. I think we just simply have some people that are deciding to take some off the table because we have had a pretty good run from that low in late December all the way up here. That was a pretty strong run. So not surprising that investors, traders are taking some off the table, but I don't think it's any more serious than that. So for ChewDog charts, thank you.